Wall Street. It's a jungle. Always has been. But a new breed of hunter is stalking the trading floor, the futures arbitrageur. These aren't your typical high-frequency traders playing milliseconds for fractions of pennies. They're looking at the long game, exploiting the wrinkles in time itself, futures contracts, their agreements to buy or sell something, oil, gold, pork bellies at a set price on a future date. Sounds simple. It's not. Prices fluctuate, fortunes are made and lost. Arbitrageurs smell opportunity in those fluctuations. Here's the play. They spot a price difference between, say, July wheat in Chicago and September wheat in London. A tiny difference, maybe a few cents. They buy low, sell high simultaneously, lock in the profit, rinse and repeat. It's not about guessing which way the market will move. It's about exploiting the inefficiency, finding the mispriced bets, like a casino spotting a loaded dice. The beauty of this game? Relatively low barriers to entry. You don't need a seat on the exchange anymore. Online platforms have democratized the market, a laptop, a decent internet connection, and you're in. Of course you need capital to play, but it's not about being a hedge fund heavyweight. Small players can leverage their positions, turn a little into a lot. The potential rewards are enormous. But let's be clear, this isn't a get-rich-quick scheme. It takes guts, discipline, and a high tolerance for risk. Futures are leveraged instruments. Small price swings can mean big wins or devastating losses. This is where the real game begins. It's not just about understanding the mechanics of the market. It's about understanding yourself, your risk appetite, your emotional control. This is where the true arbitrageurs are separated from the gamblers. Success in futures requires a certain mindset, a willingness to see what others miss, to think differently. This is where the minority mindset comes in. It's not about race or ethnicity, it's about being an outsider, questioning the conventional wisdom. The herd mentality can be deadly in the markets. When everyone's rushing for the exits, the minority mindset sees an opportunity. Take George Soros, a legendary investor. He made billions betting against the British pound. Everyone said he was crazy. He saw what they didn't, a bubble ready to burst. Futures arbitrage is about finding those hidden edges, exploiting the biases and blind spots of the market. It's about being comfortable being different, being wrong, and ultimately being right when it matters most. With great wealth comes great responsibility. It's a cliche, but it's true, especially in the world of futures arbitrage. These new wealth creators have a duty to use their profits wisely. Some argue that arbitrage is a zero-sum game, that for every winner there's a loser, but it's more nuanced than that. Arbitrageurs provide liquidity to the market, they make it more efficient, but there's a fine line between profit and exploitation, between riding the wave and creating a tsunami. The 2008 financial crisis showed us what happens when greed and recklessness take over. The future of finance depends on ethical behavior, on transparency, accountability, and a commitment to the greater good. The new generation of futures arbitrageurs has a chance to redefine what it means to be wealthy, to use their success to make the world a better place. The stakes have never been higher.